Welcome to the macro themes for the week ending the 24th of July. Really need to sort of highlight the fact that now the big buzzword in the market is inflation. We got our inflation here in Australia, also over in Europe, and then also there was discussion this week at the Fed around inflation over there. So let's start with us and have a look at what happened on Wednesday. It was really a key piece of data now, considering the RBA has highlighted it as an area that they are watching very closely. So they should be. It's their mandate. It's their idea of keeping it between 2 and 3%, and you can't call it anything else but soggy. It really was quite weak in terms of what the headline was there, and now it was probably weighed down by a surprise, the fact that fruit actually declined 4.4%, even though we had Cyclone Debbie in the second quarter. It was expected to expand, so that headline figure of 1.9 year on year was that, along with the fact that fuel was also a bit of a drag. But you really need to look at the three metrics: the core, the weighted, and the median inflation number. The trim mean number is really where everybody looks at, and the average for that was 1.8% year on year. It means that since June 2015, we've still been below that figure of 2 to 3%, and are welded there. It hasn't really seen any growth, and if you look what really drove it, it's house price inflation. Wages are the real sort of headwind, and that got back to what happened on Thursday with the RBA and Philip Lowe. He clearly pointed to the fact that wage growth in this country is below trend, it's below what they expect, and therefore is certainly something they are very cognizant of. The other thing he really pointed out is that the RBA is an independent central bank. It is not working on a global scale. It's certainly not working with the ECB or the Fed or the Bank of Japan, and he really need to put that down, considering the market's been talking about this whole idea that globally rates are increasing. Australia is different. We didn't have to go as hard on our monetary policy as those other nations did during the GFC. We didn't have to ramp up our balance sheet. We didn't slash our cash rates to either zero or even in some cases, look at something like the Swiss National Bank where they put it into a negative territory. So all that sort of was a clarification. It was interesting on the Aussie fell away, but really what happened, and this is what's probably the key around that inflation buzzword, is the Fed. Unfortunately, as we've discussed before, the Fed drives everything. The US dollar is clearly the major driving mover globally in currency markets. It's also the driving mover in equity markets as well. And the US dollar, so have a look at the Dixie, which is the basket, is actually down to almost a 2-year low. And expectations now around December rate rises at the Fed are dropping pretty quickly. Reason for it, and the line I really want to highlight, is what came out in the minutes. The minutes previous quarter, having a look at what they said, is that they currently believe that inflation is running somewhat below their expectation. This time when they released the minutes, they actually scrubbed that word out, so somewhat's no longer there, and now inflation is running below their expectation. If they can't see 2% inflation probably starting to materialise in the third quarter, expectations of a December rate rise in the US will disappear. That's going to create a little bit of pain for us here. That means the Aussie could be even as high as 82 cents, considering the amount of baked-in expectation that US rates are rising will dissipate, because in February next year they will actually change the board. So this week was huge in terms of what's going on in macro. It's also therefore a bit of a strategy change, and the impact that may now have on sort of your investments. Have a look at the fact that most of the core bulk commodities in this country, US dollar denoted, so the tailwind you get from the price increase at the moment may be mitigated by the fact that the Aussie is quite high. It also means that those US dollar tailwind earners that have been such strong performers over the last 2 to 3 years just get a bit of premium coming out. I think you need to look at what's going on in some of the healthcare stocks. Also have a look at some of the investment banks that we have here in this country. We've just seen that bit of pressure. So really interesting week. There has been a real change in that thematic trade, and therefore it has probably impacted on what might be a future expectation for your investment, and certainly something to watch over the next couple of months.
At InvestSMART, our mission is to help millions of Australians to protect and create their wealth. This is why we now offer a life insurance comparison service. All you need to do is answer a few questions, select your cover, and compare the results. This quick and easy service provides quotes with up to 9 of Australia's leading insurance providers. You can compare the benefits of each insurer with our easy-to-use comparison feature. We have a team of qualified specialists who can answer any questions you have and make the application process as smooth and easy as possible. For more information, visit our website or just give us a call.